Each of these institutions are using a sneaky trick to invest in the market every single day. What if you can make an indicator showing you where these institutions had a high probability of entering and exiting the market? That would be pretty cool, right? Well, that's exactly what I did. And to be honest, it's one of the best performing tools I've made in my trading career. Alright, enter here, set our take profit, set our stop loss. Like, this is the best indicator I've ever made. I'm gonna show you guys exactly how to use this indicator, and not only that, but I'm gonna show you a few sneaky tricks you can use when entering to raise the probability of this indicator working. Because there are a few different ways you can use it, and it's not very smart to enter just in any order block, as you'll see why. Alright, enough talk. Let's get straight into it, shall we? So what is an order block? An order block is considered a market behavior that indicates the pileup of orders from banks and institutions. As you may already know, me, you, your Uncle Rob, players like us do not control the direction of the market at all. We are just a pure guppy in the ocean of whales when it comes to trading. These ginormous banks and institutions with infinite amounts of cash are the ones that control the direction of the market. So if you put 1 and 2 together, it's pretty important to know when these institutions are entering and exiting. Now sure, this indicator isn't hacking a hedge fund's computer to see when they're entering a trade. No, it's not doing that. But what it is doing is finding spots in the market where most of the investing is taking place, providing really pivotal points in the market. The market tends to make sharp moves on either side once the order block is completed. So the main thing to take away from all this is order blocks tend to show when these giant institutions are buying and selling. And we can use them ourselves to profit greatly, as you're trading with the flow of big money, not against it.
What the fuck is going on out here? The jet skis just went overboard!
So now that you have a basic understanding of what order blocks are, let's move into how to actually use the indicator. First things first, you're gonna need the indicator. You can either go to TradingLab.ai or click the link in the description. Now that you have the indicator, you need to go to the settings of it and set order blocks to true. This will enable the order blocks. Now I am gonna go over how to use these, but make sure you watch all the way through because I am gonna go over what not to do as well, which is just as important. So as you can see, the indicator has put a bunch of red and green rectangles on our chart. These are the order blocks themselves. Green are the bullish order blocks and red are the bearish order blocks. Now, just looking from this chart right now, you can see how accurate they are. These will work in absolutely any market with sufficient volume. So stocks, forex, crypto, whatever. It will also work on any time frame. What I found to be the most accurate is using this on the 1 hour time frame. But like I said, it can be used on any time frame, but the 1 hour has done the best in my testing. How I would use this is you would enter a long trade once price comes down to a green order block. So you would enter right here, set your stop loss right below the order block and set your take profit at a recent swing high. And as you can see, price bounced exactly at the order block and we made the easiest trade of our lives. Same exact thing goes with short trades. Enter a short once it hits a red order block, set your stop loss right above the order block and set your take profit at a recent swing low. Easy trade. So it looks extremely easy to use, which it is. But these order blocks aren't absolutely perfect. You are gonna have times where price breaks through the block like a slice of cheese, which would end up making this a losing trade. There is a way to solve this problem though, and the solution is
confirmation.
Hold for confirmation.
I will only enter a trade if there's a confirmation candle. So for example, when price hits the green order block, I first want to see some type of slowing down when price hits it. So in this example, there's a big bottom wick, showing there's a lot of buyers at this level, slowing down the selling. If you see something like this, where price just breaks through it with strong big selling candles, you would ignore this order block. So you want to see some type of slowing down. That's the first sign we're looking for. The next sign, if we are going long on a green order block, is we want to see a green candle close right at the order block, like this. So we have signs of price slowing down right at the order block, and we see a green confirmation candle that closes right at the order block. It's even better if that green candle is a bullish candle pattern, like a bullish engulfing candle, for example. If we get both of these confirmations, there's an extremely high chance the market will head in the direction we want it to, which is exactly what it does. Same exact thing when it comes to shorting. You want to see price slowing down and start resisting at the red order block. So a big wick at the top of the candle. Then you want to see a red confirmation candle exactly at the order block. Again, it's very important you wait for this red candle to close before entering. Boom, you got another winning short trade. So that's how to improve the success of the order blocks. Let's go over when not to enter into an order block.
But wait, aren't you forgetting something?
Who the hell are you?
Well, I'm Mr. Double Your Money, of course.
Wait, what? How are you doubling your money?
It's simple. Have you heard of Hanker Trade?
Hanker Trade, which is the forex broker I use, is running a special promotion where if you deposit money using the link in my description, they will match it up to 25 grand. So if you deposit, say, $6,969 the first time you deposit, they will match that and give you $6,969. And that's just one of the benefits of using them. They have some of the lowest fees on the market, they have up to 500x leverage, they have extremely low spreads, negative balance protection, and overall just a really great broker if you need one for forex. I cannot recommend them enough. So yeah, if you want to be like Mr. Double Your Money, go to the link in my description and get that first time deposit bonus. Like seriously, it's free money. Okay, back to the video. So when should you not enter into an order block? Like I said earlier, if price breaks through an order block very strongly, like this, do everything within your power to ignore that order block. If the order block is very small, like this, ignore that order block. These order blocks are usually not that strong, so it's best just to ignore them. The third and final reason to ignore an order block is if it's already been touched before. So right here, there's an order block, but it has already been touched. So even though price is hitting it again, we ignore it because it's already been touched before. And that's it. So now that we know all the rules, let's do some live trades. If you follow all these rules to a T, this indicator in itself is extremely powerful. So first example, price comes down, we see it slowing down at the order block with a bottom wick. Good sign. We then see a bullish green confirmation candle. We only enter once the candle closes. Once it does, set your stop loss right below the low of the candle and set our take profit at the recent swing high. Easy trade. Same thing here. Price starts slowly coming down exactly at the order block. We get a nice big green bullish candle, enter at the close, set our stop loss below the order block, set our take profit at the recent high. Easy profit. Here, price is starting to come down to the order block. It is slowing down a decent bit, but we never get a green confirmation candle that closes, so we never enter the trade. And look what ends up happening, it breaks the order block, so we really dodged a bullet there. Here we're looking for a short trade on a bearish order block. Price starts coming up to it, but it breaks through it way too fast with a very bullish candle, so we ignore the signal. Here's another short example. We see a bearish order block is made, price comes up to it, starts slowing down, leaving a big upper wick, good sign. We then wait for the close of a red bearish candle. Once it closes, we enter, set our stop loss right above the high of the order block and set our take profit at the swing. More easy profit. All in all, I honestly think this is one of the best tools I've ever made, especially if you pair it with technical analysis and other trading strategies. If you want to test it out for yourself, you can go to TradingLab.ai or click the link in the description. Thanks for watching, and I'll see you guys next time.
Well, I'm Mr. Double Your Money, of course.